NIIT Technologies has proved its mettle amid challenging times. Despite deriving a significant share of its revenue from travel and transportation industry, the company has reported industry-leading revenue performance in Q4 FY20. In our Ideas for Profit today, I will discuss if this IT major should be on investors' radar. In the quarter under review, the revenue grew by 3.3% in reported currency and 3% in the constant currency. Undoubtedly, industry leading so far. Now, it has a high exposure to the tune of about 28% to the travel and transportation segment alone. Now, the company's exposure to the airline industry is of the order of 13% of the revenue. Now, the reason behind NIIT coming out relatively unscathed is twofold. On the supply side, it had better preparedness and seamlessly moved the entire workforce to work from home with minimum revenue loss. On the demand side, barring travel and transportation, other segments stayed supportive. Now, the steady deal flow and also the ramp up ensured the loss in airlines due to COVID-19 was more than made up by stabilization of some of the recent large deals. NIIT Technologies ended FY20 on a strong note, delivering best-in-class constant currency growth of 18.1%. Digital formed 37% of the revenue and grew by a robust 47%. Now, operational efficiencies came to the fore in challenging times, with the company maintaining its margin. It has therefore decided not to give increments in FY21 and expects margin erosion to the tune of 80 basis points only in FY21. NIIT Technologies bagged the orders worth of $180 million in Q4. The company also won 3 large deals in the quarter, 2 from BFSI, that is the banking financial services, and 1 from APAC. Now, the unexecuted order book at the end of Q4 stood at $468 million. Now, travel and transportation degrew as 46% of the segment's revenue comes from the airlines industry. Now, since some of the airlines were also part of the top 20 clients, the same could also see some downtick going forward. However, insurance, which the share of which is 30%, and others, which is a combination of manufacturing, oil and gas, retail, and government, with a share of 26%, saw decent growth. NIIT Technologies management is sensing opportunity amid crisis. The company's seamless transition to work from home has earned applaud of the clients, and it is expected to gain from vendor consolidation and come out stronger post this crisis. Now, the gain in wallet share can also come with some pricing discount to start with, and hence the management has guided to probable 80 basis points dip in margin in FY21. Now, there could be some extension of the credit terms, but no major default as such. Now, despite the strong headwinds from the transportation space, NIIT Tech expects a single-digit decline in revenue in Q1 FY21 and a sequential growth in Q2, and expects to end FY21 with industry-leading performance yet again. Now, the confidence stems from large order book that provides the revenue visibility from here on. NIIT Technologies is also looking to penetrate growing verticals like healthcare. Now, seen in the context of Q4 performance and guidance, the recent stock correction also presents an opportunity, as we also firmly really believe that technology will have stronger tailwinds in the post-COVID world going on from here. Hence, NIIT Technologies should be definitely a part of investors' shopping list, and we would really recommend investors to add it on every market correction.